I'm not a market strategist, but I think
Yeah.
Ronnie caught it right.
Yeah.
I think it really depends on your horizon.
Okay.
I believe, in US dollar terms, that the absolute purchasing power of the US dollar declines by 75% in 10 years. And if you believe that, it's likely that over 10 years, granted that most people don't think in those terms, the increase in the US dollar gold quote, the nominal gold price, increases in a way that measures or mirrors the decline in the purchasing power of the US dollar.
Yeah.
Clearly, I didn't sell a bunch of those junior golds because I wanted to trade myself out of a profit. Clearly, I believe that on the speculative fringes of the gold trade, the things were excessive. But I've gotten a lot of questions in the last 2 weeks about the pullback in gold.
Yeah.
And I guess one of the beauties of age is I say, has the gold price declined by 9% or has it increased by 100%? It's a function of your time frame.
Yeah. As a probably one of the biggest bulls in a commodity as I've ever been was uranium. Looking at it from that perspective, we had a chance to chat to Cameco. Roll forward a few months, they've obviously just done this Westinghouse deal, 80 billion with the US government. Obviously, I know you're a shareholder. What are you thinking of how that space is now evolving?
I'm a large Cameco shareholder.
Yeah.
I was cautious when Cameco first did the deal with Westinghouse because I was thinking, what does a mining company know about engineering?
Yeah.
The last two quarterly income statement suggests they know a lot.
Yeah.
Which is handy. I would caution you about reading too much into the announced transaction because it's an announced transaction. In particular, the political component of it. Traditionally, politicians are lying when their lips are moving, so don't spend the money. What's useful about it, I think, is from a political and sociological perspective. Whereas 5 or 6 years ago, I was vilified for being in the uranium business.
Yeah.
Now these morons want to subsidize me. And that says a lot about what's politically palatable. Around the world now, stable, economical baseload power that doesn't generate carbon is front and center in everybody's mind, to the extent that even Congress, who has sort of PhDs in public relations, understands that there's political cover for uranium, and that's very important.
Nuclear power has undergone a political transformation. 5 years ago, investors in uranium were often criticized or dismissed. Today, the same institutions that distanced themselves are offering incentives, subsidies, and public endorsements. What changed? Nations seeking stable, carbon-free baseload power now recognize nuclear energy as essential. Even traditionally risk-averse policymakers acknowledge the need for reliable generation that solar and wind cannot provide alone. As aging reactors around the world receive multi-decade life extensions, nuclear demand is accelerating now, not in the distant future. This shift in perception marks one of the most important turning points for the sector.
I think that's important 5 or 6 years from now.
Yeah.
What's important now is that plants that all of us had in our demand forecast shut down are getting 20-year extensions.
Yeah.
That impacts demand in 2025, not 2030 or 2031. If you do net present value calculations, present matters a lot.
Yeah.
And so the most exciting thing to me is the continuing pace of Japanese restarts and closure halts. The other things that you talk about are extremely interesting in the longer term.
Yeah.
But if you're using a 10% discount on net present values, cash flow that occurs after year 8 is effectively valueless. So I want to caution your listeners and readers to understand those for what they are.
Much of the optimism around nuclear energy once focused on distant forecasts. But the most meaningful developments are happening immediately. Reactors once expected to close permanently are receiving 20-year extensions, directly increasing uranium demand this decade. Japan continues restarting reactors, reversing years of shutdowns, and signaling confidence in nuclear safety and reliability. These near-term shifts matter because present cash flow is far more valuable in discounted models than distant projections. While long-term innovations, such as small modular reactors, gain attention, the most powerful catalyst today remains the return of existing capacity and the prevention of premature closures.
I have, if the deposits are very large.
Okay.
If the deposits are large, what it means is that you can have process failure in the first year or two, and you live to fight again another day.
Yeah.
And the deposits are also strategic, meaning that it's likely that they'll, because of their very size and scale, they'll likely attract financing that has as much to do with geopolitical positioning
Yeah.
as it does all-in sustaining cost.
Yeah.
We saw the beginnings of that in the last uranium cycle, where some of those large, low-grade Namibian deposits attracted capital that would seem to have been more political than economic.
Right. Okay.
And I think it's important to note that that could be the case. The other thing is, in those roll front deposits in particular, the metallurgy can be very attractive. The extraction can be, I'm not saying it is, but it can be low cost enough that grade becomes less of an issue.
Yeah. Okay. You were mentioning obviously the Kazakhs at the time when we were talking. You'd said a lot of the middle management had left, a lot of really good quality people.
Yep.
You look forward even out to early 2030s, a lot of their production profile falls off a cliff by that point.
We've always been.
Have you gained any further information, any further knowledge of what's going on there?
I wish I could say I have, but I have not.
Okay.
The consequence of that is that there are too many unknowns for me to own Kazatoprob, which is unfortunate. It was my largest position some years ago.
Yeah. So loading up still on Cameco for the time being, though.
Yeah.
Large uranium deposits play a crucial strategic role. Their size enables operational setbacks without destroying long-term economic viability. In past cycles, countries invested in mines not just for profit, but for geopolitical leverage, a trend likely to reappear. At the same time, uncertainties remain, especially in regions like Kazakhstan, where limited information clouds long-term production forecasts. With significant natural decline expected in the 2030s, the global supply picture becomes even more dependent on diversified sources. This environment favors well-capitalized producers and projects capable of meeting both economic and geopolitical needs in an increasingly tense energy landscape.
What you say is very astute. By our reckoning, about 7% of world copper supplies are shut in.
Yeah.
One would have expected that big of a production hiatus relative to how tight the market is to have a much more dramatic impact on price.
Yeah.
The only explanation I can give you, and I'm not an economist, is that the global economy is weaker than people think it is. You can have supply declines if you have weak demand and you don't move the price that much. The fact that the price moved up 5% while you shut in 7% of world copper supplies, remember Cobre Panama as an example.
Well, yeah, that's last year, yeah.
That's pretty dramatic. I see the same softness in the oil quote, which makes me think that what we're experiencing in real time is a slower global economic climate than the big thinkers would prefer that we believed.
So perhaps the data coming out of some of these, perhaps out of China, the US, you're not particularly believing all of it?
The part of the U.S. I live in is very strong, but I have no other explanation for the commodity quote than weak demand. I'd love it if somebody could, freshen my old memory, but it's difficult for me to explain in any other context.
Is it just a case of that there's some inventory still sloshing around and that we might see this parabolic move upwards in copper, or are you not on that camp?
I'm agnostic. I don't know.
Yeah.
That isn't, it really doesn't go to the heart of what I do.
Yeah.
I think there was substantial unstated copper inventories that came into the market 2 years ago. The Russians obviously needed cash. They had copper, they had nickel, and you saw the impact on those markets.
Yeah.
Today's circumstance, it really baffles me.
Outside uranium, commodity markets are sending mixed signals. Despite major disruptions, such as 7% of global copper supply temporarily offline, prices have moved only modestly. Ordinarily, such shortages would spark dramatic rallies. The muted response suggests a deeper issue. Global demand may be weaker than headline economic reports imply. Similar softness appears in oil markets, contradicting the narrative of robust growth in major economies. Hidden inventories, emergency selling from conflict-affected regions, and understated demand weakness may all be contributing. The disconnect raises an important question. Is the world entering a slower economic phase than many policymakers acknowledge?
I'm not a market strategist, but I think
Yeah.
Ronnie caught it right.
Yeah.
I think it really depends on your horizon.
Okay.
I believe, in US dollar terms, that the absolute purchasing power of the US dollar declines by 75% in 10 years. And if you believe that, it's likely that over 10 years, granted that most people don't think in those terms, the increase in the US dollar gold quote, the nominal gold price, increases in a way that measures or mirrors the
Yeah, you
decline in the
think so.
purchasing power of the US dollar.
Yeah.
Clearly, I didn't sell a bunch of those junior golds because I wanted to trade myself out of a profit. Clearly, I believe that on the speculative fringes of the gold trade, that things were excessive. But I've gotten a lot of questions in the last 2 weeks about the pullback in gold.
Yeah.
And I guess one of the beauties of age is I say, has the gold price declined by 9% or has it increased by 100%? It's a
Depends
function
on
of your
how you
time
look at
frame.
it. Yeah.
I ask myself when people ask me where we're in the gold bull market, what would cause me to sell my gold? Well, the end of the weaponization of the US dollar globally, unlikely. Solving debt and deficits,
Not gonna
highly
happen.
unlikely.
Yeah.
Reaching a political accommodation to reduce the $120 trillion in net present value of entitlement obligations in the U.S.
Yep.
Basically telling old guys like me, yeah, you paid in for 60 years, but you're not
But
getting
you're not
out.
gonna- yeah, no, it's, yeah.
I don't reckon that happens.
No.
I also believe, and this is an unpopular point of view, that the real rate of deterioration of the US dollar isn't measured by the CPI. That number, if you believe it, is 2.9. It doesn't include food or fuel when it's
I
inconvenient.
know, it's crazy.
An index that doesn't include lunch is of little utility to me. I believe that the purchasing power of the US dollar is declining, not relative to other currencies, but absolutely, at about 8% compounded.
Yeah.
If you believe that, then the yield that you get on a US 10-year treasury is strongly negative.
Yeah.
Gold does well when investors and savers are concerned about the maintenance of their purchasing power in fiat instruments. What could make you more nervous than a guaranteed 4% annual reduction in your purchasing power for 10 years? And that is a very bullish scenario for gold. Now, I'm old enough to remember too, Peter, in 1975, in the midst of that epic bull market, where gold ran 30-fold, in 1975, the price of gold fell by half. You could have dramatic cyclical declines in secular bull markets.
Yeah.
And I was sort of amused to what I guess I'll call newcomers to the gold business being freaked out by a 7 or 8 or 9% decline that we've just been through.
Yeah.
Perhaps it's my age, but it didn't even register as static to me.
Gold's recent volatility has sparked concern, but long-term perspective tells a different story. Over the past decade, gold has more than doubled, even as short-term drops unsettle new investors. The broader issue lies in currency erosion. Purchasing power in major economies is declining faster than official inflation data suggests. If real dollar depreciation is closer to 8% annually, then savings in traditional instruments are losing value steadily. Gold historically excels when confidence in fiat currency weakens. Unless sovereign debt, deficits, and entitlement burdens dramatically reverse, a highly unlikely outcome, gold's strategic importance remains intact, regardless of short-term fluctuations.